Let's say you are a dentist and you live somewhere in Missouri and you want to build a fourplex, right? Was that random enough? A dentist in Missouri? Mm-hmm. Sherida is acting like it's not random enough. So we're going to say a pharmacist in Tennessee. Are you happy now?
Ooh, well,
there we go.
Up. Yeah.
Yeah.
Okay.
A pharmacist in Tennessee. And there's a couple of lots around the corner from your house. You want to build some fourplexes on these. You think that would be a very good idea. Well, let's talk about what that means. And I have a couple questions for Lane, and I'm sure that Sherida does as well. But Lane, the biggest thing to tell us about, what's this whole 10 loan limit thing?
What is it?
Yeah, what is it? What does it mean?
Well, it's a limit of 10 loans, believe it or not. No, it is it's a Fannie Mae, Freddie Mac. So everything, the best type of financing you can get in the 1 to 4 space is the type of financing that I specialize in. Just because you've got 30-year amortization, fixed rates, the qualifying is more standardized. And if you're working with a professional, you can typically make it a pretty smooth experience. So they feel, they set their limits not off of a dollar amount that you can borrow. It really comes down to the amount of properties that they allow you to borrow against in your name. And what qualifies as that is any 1 to 4 unit property where your name is on the note personally. And once you have up to 10 of those properties, Fannie Mae and Freddie Mac have said, you're done with us. Congratulations for building your portfolio. You have now graduated on to other commercial outlets that may or may not have as good of terms, but you need to start borrowing as an entity at this point. Now, you can have multiple loans on the same property, and that still counts as one. So, for example, some people have a mortgage on their primary residence and a home equity line behind it. That still counts as one. It's not loan count, it's property count. And it doesn't matter actually what the balance of the loans are. You could have 10 $100,000 loans or 10 $1 million loans. That is not scrutinized as part of that process. But that's when people refer to the 10 loan limit, that's specifically what it boils down to.
Now, what if I want 10 loans and my husband wants 10 loans? Can we do that?
That's a great question. The answer is yes. This is something that I'll typically bring up with clients that I know want to get aggressive with building their portfolio, meaning that they've got the funds for the down payment requirements, and I can see that they want to get aggressive and tap into this financing. Where if you were to do that, you would want to make sure that you and your spouse were on the loan separately, because when you co-sign on loans together and you have more than 10 loans between the two of you, that loan cannot work. So if you have 5 in your name and your husband has 5 in his name, you're already at 10. So you would want to qualify for these loans individually, and there's a strategy for that. We want to sit down. Income has to be in line, because debt-to-income ratios is the name of the game when it comes to this type of financing. So the individual would need to be employed, have a great credit score, but absolutely, that's a process I've worked out with numerous clients over the years to help grow a very, very healthy, large portfolio.